but it allows people an opportunity to participate with lower dollar amounts in these investment opportunities. Otherwise, they might not have the opportunity to do before. And the first thing that has happened is created awareness for people, because people didn't know these types of assets exist.
Hello and welcome to the Neighborhood Money Podcast, a video podcast here to talk about personal finance and helping you build a life you deserve. I am your host, Cavan Stackpool, and my co-host, Drew, on the other side of the screen, or the other side of the headphone, is Drew Norrie. And today, Drew, we got an awesome episode, and it's actually a topic that we haven't quite touched on the podcast yet, and that's all about crowdfunding, investing into assets that traditionally you wouldn't be able to, but now with, just a little bit of money, you can invest into these assets like commercial real estate. But we brought a guest on, and that's Craig Cecilia, the founder of DiversyFund, and that's exactly what their mission is. It's to help the everyday investor invest for as little as $500 into assets like commercial real estate. So such a great conversation. Super excited to bring this to our listeners today.
Yeah, and Craig kind of goes through his aha moment with this business venture that he decided to do. And through this Jobs Act that happened, you no longer have to be the top 1% or these accredited investors to be able to invest into real estate. And he saw that opportunity and showed, I know what I can do going forward and be able to help the little guys to actually be able to get into what the 1% always have been able to. And he's done it very successfully. Talking with him, he is a professional, highly intelligent guy, and I'm excited for you guys to listen to this interview.
Yeah, he's a true entrepreneur, and he is helping a ton of people get exposure to this asset class, and it's just a great conversation. So Drew, let's between us, let's just stop talking and go listen to what Craig's got to say. Joining us this week in the neighborhood is Craig Cecilia, co-founder and CEO of DiversyFund, a crowdfunding investment company that opens the door to everyday investors to invest into real estate like the 1% of Americans. Craig, thanks so much for joining us here today in the neighborhood studio. Looking forward to this conversation. We haven't really had this type of topic before, crowdfunding and investing into real estate, for the average Joe. So really looking forward to the conversation, and so happy to have you here. How's it going today?
It's going great. Thanks for having me.
Before we even get into all of that, let's talk a little bit about the man behind the company, behind DiversyFund. How did you personally get into the world of real estate investing, or where really did you start your personal finance journey?
Yeah, I would say it goes back to childhood, and then the story goes, I was fortunate enough to, when I moved to California, I learned from a couple people that did a lot of syndication, raising capital. That was one person who had to structure deals and raise the capital. Another person was a real estate developer. I was around 22, 23 at that point in time. But I grew up in kind of a working class family on the East Coast, and seeing both my parents kind of work really hard. Mom was a school teacher, my father was in retail. They really kind of didn't really go up that wealth ladder. We weren't exposed to these types of investments. Heard whispers and stuff, and kind of was from a wealthy area too, so it's kind of surrounded by all this money. I was always interested in how people were, how they got that wealth, where they come from, and how they do things, and the understanding of why did my family have those same opportunities? And so with that, I kind of set out my journey in life as, hey, I want to do something different. I want to become an entrepreneur. So when I moved out to California, I started surrounding myself with people who are successful. And I think I got lucky in a respect that I got surrounded by someone who knew how to raise capital, structure deals, and the other person was into real estate development at that point in time. This was, I would say, the late 90s. And so kind of I started out. And then with everything just happening, and with the influx of technology kind of taking off, and then, of course, social media came out a little bit later, kind of giving away my age here. And then some of the regulations that got passed during the last couple decades, all this stuff kind of came together, and I had that aha moment. And I was like, okay, this is what I'm supposed to do. This is what I'm meant to do. And it was not just about myself. It's probably giving back to other people. So just kind of being in that kind of money raising world and that capital world, it's a different world. It's very opaque. It's not transparent at all. They make a lot of money, a ton of money. A lot of the wealth in this country is made through the private markets. And so it was more than just having an opportunity to build wealth for myself. It was, can I give back? And so when I saw all the regulations with crowdfunding, I'm like, here, this is what I'm supposed to do. This is how I'm supposed to give back. And that's kind of where the light bulb went on to create DiversyFund.
So with that aha moment of yours, I remember seeing it on one of your Instagram posts actually just recently. Going through that Jobs Act, was just because you were in the industry, you kind of knew what type of regulation was coming, or how did you get exposed to, say, the Jobs Act regulation?
Being in the industry, I knew what was going on, and then I was just kind of studying how my current business at the time could be more efficient by leveraging technology. And so I was already kind of playing around with websites and raising capital through campaigns, raising money through paid ads and through referrals, and how could I optimize that? And then I just kind of saw all this stuff happen, and I was like, wow, now you can really push this out through social media where you couldn't before. It had to be done through someone that you knew, or you had to go out and hire an attorney to create a fancy structure for yourself, or work just with institutions. So kind of really drop that barrier where you're able to advertise now online, which you have a lot more awareness and exposure with that. And then slowly, some of the regulations got passed where you could offer to non-accredited investors. So for people out there who are not sure what that is, accredited investor means you have to make $200,000 a year or have a net worth of $1 million outside your personal residence, and not a lot of people have that. I think the numbers are like 12% of the population, the U.S. population, and so with non-accredited, is everybody else can qualify for that opportunity. So that was kind of a really big thing to happen, and and it's just by doing that, I was like, okay, now I could use technology to kind of push our product out there, and that would also give us the ability to aggregate larger amounts of funds from many people so we could go out and buy those same institutional quality investment opportunities.
So I think that brings us right into what crowdfunding is. So for the listeners that don't know, do you want to give a general idea of what crowdfunding is and how DiversyFund really uses it to allow people like us and the person that's listening to invest into real estate?
Yeah, there's been forms of crowdfunding, I could say, going around for a long period of time. If you want to go back in history, if I want to trade you 5 goats for a house or something, because it goes way, way, way back. But what it pertains to nowadays is kind of aggregating from a group of people, funds from a group of people to go either invest in a company or invest in some type of asset. And so when they've passed these laws, there's all these variances and little codes with it. This is what you learn all the time and how it works. And, I don't know, I think attorneys designed this because there's a lot of complications with it, but it allows people an opportunity to participate with lower dollar amounts in these investment opportunities. Otherwise, they might not have the opportunity to do before. And the first thing that has happened is created awareness for people, because people didn't know these types of assets exist. Now you have things like art, you have oil and gas. I've seen companies like wine, farmland, real estate, venture capital. Now all these type of exotic alternative investments you're able giving these opportunities to the average person.
So for the average person, you did mention a little bit about how in the past you had to be accredited, meaning you had to have a big pile of money or net worth or making a lot of money every single year. But now that it's opened up through crowdfunding for the average person, what does that really look like for someone? How much do they need to get started? Is it something as easy as like a couple $100, or what does that really look like?
Yeah, I mean, our minimums are $500. The barrier to entry is very low. If you really want to build wealth over time, $500 is not going to make you into a millionaire overnight. But however, these tools are there and they exist where you could start putting a little bit here, a little bit each month. Maybe you might do it quarterly. You could start kind of putting yourself on a path to diversify your portfolio to give you a greater chance to build wealth over time. So I think that's the most important thing. Is the first thing is it's giving people an opportunity to understand it, to participate, giving them awareness about these investments. And the minimums are so low that pretty much anybody could get involved with that today. it still kind of goes. There is a lot of traditional things because we're talking about finance here. You
Yep.
still need to get in the habit of saving at the end of the day because you need to have money go somewhere. But the
Yep.
whole idea is not to put your money maybe into a mutual fund or a money market account or keep it in a savings account, and to start putting your money to use in some of these investment vehicles that the wealthy use, and that's how they kind of create wealth for themselves and generational wealth.
So being crowdfunding, I'm sure there's a lot of marketing that you do along with this, and then creating awareness for people that didn't know these type of investment vehicles existed. Has there been like a lot of positive feedback saying like, I can't believe I never knew about this, I'm so glad you reached out to me? Or what are people's big thoughts on when they kind of start first hearing about DiversyFund or other type of REITs?
Yeah, I mean, the education component is huge. It was one of the things that we've gotten a lot of feedback from people, and they really don't understand how it works. Mm-hmm. And so we've had to invest more and more money into the educational components of that. And this is across everybody from all different stations in life and educational levels in life, which was surprising to me. So very highly educated people still don't understand this asset class. So that I was taken back a little bit. So we have invested a lot of time and energy into education. Continue to do that. We have the feedback loop going, always kind of having people give us questions and kind of give us back. But getting people involved and giving them the opportunity gives me that sense of accomplishment at the end of the day. It's like I took an idea, we built it from scratch, and here we are today. Yeah. So I am just overly excited about everything we've created, and we're constantly trying to make it better for people to understand it with whatever questions they might have.
This might be kind of backtracking a little bit on our conversation, but having you starting this from scratch, I always get very interested in this. From the job that you were at before, or the people you were working with before, was it really difficult to make that leap of faith of starting your own business, or were you like very impulsive on just I need to go into it, or did it just take a really long time and something finally hit, or like I just have to go? I
would say a couple things. One, I had a pre-existing business, so it's tough to go to your employees, we're going to do this. I think I was called delusional a couple times in the process. So how do you think this is going to work? I was like, it's going to work. And that's all I said. I'm going to make it work. I didn't have any data to support how it was going to work. And that was tough to do that and get that off the ground with people. And then after that was kind of, okay, I had to tell myself, okay, I have to kind of shut down my old business and dedicate myself full time and build out a team around there, go find a co-founder, build that team around it who believes in that vision. And then, because it's kind of a leap of faith, hey, is this going to work?
Yeah.
And then once you prove concept, like where we are today, it's great because now we have proof of concept and everything, and the business exists, it's got cash flow and all that stuff, so it's easier to kind of recruit people to work for you. So that was a challenge in itself. And we did this kind of halfway through our evolution was our growth. You had a pandemic hit too at the same time, so that was kind of like, whoa, what's going on here? Yeah, how do I deal with this situation? And for me, I've gone through a couple of market cycles, and I was like, we're going to be buyers. We're going to go out and we're going to attack. And everyone's kind of looking at me. I'm like, no, what does that mean? I'm like, well, we're 5xing our marketing budget. And everyone's kind of like staring at me. Why are we doing this? I'm like, yeah, because when everyone's running, you go the opposite direction. And it's kind of, that's always been my kind of philosophy. I was like, I'm not going to miss out on another downturn because this is where the biggest transference of wealth happens. And the data even says that. The data says, hey, if you look back on who benefited the most during the pandemic, it was people who already had money. And who got left behind again, it was the same cohort of people. So it's this repeat pattern that people keep going through, and it's kind of, man, I don't know what it is with human nature. It's kind of nice to kind of have a product that can help people out through it, but still at the same time, the end data still says this transference of wealth happened again, the wealth gap widened even more, and we're kind of back at, now we're in a stage with massive inflation, and it's just tough for the everyday person to get by.
Yeah, and not only like just getting by, but even for a business like yourself, I suppose every property now that you're buying is getting more and more expensive and a lot, more competitive on all your deals.
So you look at two sides. One side is our current portfolio is doing phenomenal. It's great. So that is really good when you're starting a business out, and that component of it is you really want to make sure your first two assets are performing well. So that's a really positive thing. And the other thing is, you have to rely upon our experience and us being in the industry for a couple decades here. It's going out and finding there is still opportunities out there, and there's always will be opportunities in changing markets. And I see that being a little bit, you got to kind of tighten up your underwriting. You got to ask a couple more questions. But going through that a couple times, there is opportunities. You just got to be patient with it. But you got to stand firm and watch out and not overbid on things. Definitely don't want to be in a bidding war at all right now.
Well, I think it's pretty cool that you're allowing, the average investor to get into real estate, because it is such a barrier for people. If you think about it, if you just want to buy one rental home, the amount of money that you need at any given point in time is pretty significant for most people. But the fact that you allow people to onboard for as little as $500 to get exposure to these assets is pretty incredible. And specifically, like you were just mentioning, in a pandemic when a lot of people run, and you were saying like this is where the wealth happens, you can help people try to understand that, and hopefully you were able to help people kind of dive into that and believe in that, and start putting their money away and investing into DiversyFund through this times to hopefully put an upward trajectory on their wealth. But Craig, with that, because you have, people that are coming in with as little as $500 invested, what exactly are they investing into? I know Drew had mentioned it a little bit before when he, brought up REITs, but can you kind of give us an idea, or our listener an idea of, specifically the investment that DiversyFund provides?
It took a while to get the kind of system going, because you start with an idea. Remember, the guys, you're delusional, nothing's going to happen. And then we kind of did it, and the way we kind of created out in the beginning, we had some people help guide the process, and we got to a point where the whole thing's automated, so it's all done through product and graphics and our marketing department with the technologies. We have an upgraded app on iOS and Android, so the whole transaction is pretty seamless, pretty frictionless process for people. So what we do is we built ourselves to a level where, okay, we know how much money is coming in, and then we put it into an asset that's usually between, I don't know, let's say about 100 to 300 unit apartments throughout the U.S. They usually purchase price between 15 and 25 million. Requires at least a third of that, maybe even higher, about $7 to $10 million of down payment money. And so we're aggregating enough people where that comes in on a monthly basis for us to kind of purchase those assets. So if you think about it, it's like a group of people come across. There's hundreds of people coming in today. We pool that money together, and then we use that to purchase those assets. And we do that again and again and again.
With most of these REITs, or like say would they be considered your competitors for other type of REITs? Do most of these REITs go into multifamily buildings, or do you see a lot of them more going towards commercial properties or single family homes? I mean, it's probably all of the above.
It's a little bit of everything. I would say the amount of users of true investors, and I call them customers, we have, there's probably like maybe one or two other firms in the whole U.S. that has that same amount. So the competition is very limited. It is kind of like moving a massive boulder to get things going for this, and then you hit a lot of obstacles. And there was players in the space, and some of them didn't make it out, and there's some who've decided to pivot and go into just back to accredited institutional investors. For us, we've stayed on that path, so that has been really nice because there's not a lot of competition out there, so that has been useful for us. But you can, it depends. So we're kind of focused on just like really one product and one asset within real estate itself. It's those apartments, really kind of class C, B, maybe some A apartments throughout the U.S., and that's where we're hyper-focused on that. And that's because a lot of the reasons we're hyper-focused on one is because just the communication and educational components is a lot more complex than we thought. Everyone needs that kind of content delivered. Sure. So we depend upon a lot of data and algorithms to help us push that content to people. So that's where we're at as an organization, is trying to really focus on that one asset class for everybody today. And down the road, once we grow a little bit more, we'll introduce more and more assets. And if the market changes, we'll try to chase something that fits that period of time. Again, something that could build wealth for the everyday investor.
So when I think about investing into, like you were saying, commercial real estate, you have your down payment, and then that capital is kind of locked up over time, and then you start getting cash flow back. And what does that look like when investing through DiversyFund? Is there any restrictions around your investment? Do you have a certain amount of time that your money is locked up with DiversyFund? What does that look like?
To maximize your return, usually it takes 4 to 5 years. You have to go through the process of what the asset we chose, the renovations, the purchase stage. I call it the renovation stage. And we could use whatever you lease up stage or the repositioning stage, where you get those optimize those cash flows of that particular property. And so it's generally like year 2 or year 3 is when you start, all that stuff is finished, and then you hold on to it. And if the market looks good, you sell. If not, you kind of might wait an extra year or 2 to see what the market is trading at that point in time. But that's where you're really kind of developing that appreciation, that property. And that's when the income comes in with the increased rents. That's when the cash flows come in. And when those cash flows come in and they outweigh the expenses towards the property, that's when you start giving dividends out to the customers directly.
So you can really think of it as a stock, in a sense, where you put money in and then you're going to get dividends further down the line than you would a stock. But then is there any time period that you have to wait to pull it out, or do you have access to your money as, maybe I invest tomorrow, but then the next day I can just pull it out because I said, hey, you know what, maybe this isn't for me?
Yeah, I mean, at the beginning stages and with our first couple structures, to have that provision, we don't have that in there because really the fact that the properties haven't really appreciated, so you'd be taking it out before you've kind of made any kind of return on your money. However, we are introducing some liquidity options going ahead because we have hit that maturation point where we have enough assets that are positively cash flow. So yeah, we'll be doing that for people. But really, if you're talking about investing, you need to train yourself. And you guys know this from a financial perspective. This is a growth investment. It's not spec. It's something that you have to understand. It's not really income, the one we have. So it's something that you're going to benefit the most if you let it kind of sit in there and appreciate. And so since our minimums are so low, and if you're kind of going, hey, I need my $500 or my $5,000 or $10,000 back, you got to kind of look at your situation in the first place. Is you shouldn't have probably stuck that much money in. Look at where you are, and it's not that much money at the end of the day for people. If you really need $500, you got to take a step back at where your financial goals are, because if you really want to create wealth for the long term, you got to kind of put this away and book this for later on. So that's where the educational components come out, and that's where kind of us introducing more and more tools to make sure that people really understand what they're getting into and how it actually works, and how does it work for them? How does this work for their personalized financial goals? And that's kind of where we're hunkering down, because everyone looks at things differently, but how do we kind of communicate that? And it's like, for instance, if you get your paycheck each week and you want some money to go with that into direct deposit into our offering, we could do that today. And you also see, and I don't, with a lot of the fractional trading platforms like Robinhood, etc., that you could set up where you take out $100 maybe each paycheck and go into some ETF and the same thing. So people are starting to develop those behaviors, which is a great thing. But really, that's where the educational component comes in. And which even more for us is I'd like to open up more private markets because it's so opaque. There's so much opportunity there. These are really the colossal returns. These are all these giant endowment funds and pension funds stick their money into. And you've seen the yields that people make on these things. And why do they benefit? And they benefit so much, and why can't the everyday person have that same opportunity? And there's a lot to navigate to that. And the navigation is it seems like every 4 years there's a shift in the way the regulatory agencies work. So it's like okay, it's like playing a game of football and they're taking away a down from you. It's like, okay, what's going on now? It's like every time there's a different shift. But that's just kind of getting into that growth stage of your company where you're able to adapt to things with a kind of changing culture. The outside water is always kind of changing all the time, and for us, we're just fortunate we're in that stage right now. So when things do change, we can adapt pretty quickly to keep on going.
Yeah, with that, bringing up regulation, I think I was seeing that your co-founder was like an attorney, I believe. Is that correct?
Yes,
Yeah.
yes. And
So was that a very important thing when you were going and searching for a co-founder and like building a team around you? It seems like a lot of people we talk to, one of their big keys to success was just building such a good team around them, and that helps just move them on to like the next stage. And the business that you're in, it seems like there's so much compliance on the side of it. So having like an attorney on your side, I'm sure for you lets you sleep a little bit better at night.
it is definitely those are great questions. I'm an advisor in a couple of groups, the startup groups, and I'm always giving advice on what you should do when choosing a co-founder. And you look at your strength and what's your weakness. You want to match yourself with your weakness. In this case, I knew going in, because I had experience with syndicating deals and doing stuff that's very complex. It'd always be complex. And I was like, I have to have that knocked out. So to have someone, a co-founder who had that securities background, not only did he have a securities background, he had a background in private equity and commercial real estate as well. So that was a really good match. And in some cases, you could go out, and I could have went out and got a technical co-founder as well. And that'd been great. We'd have the best code in the world, and everything would be smooth. And we do have issues with code all the time and stuff. So I'm like, okay, why did I get? But those things you can manage. But if you make a mistake on the compliance side, it could just nail you, and you might not recover. And then as you grow, you attract more and more players. Right now, our leadership team is fantastic. I love our leadership team. And so that's kind of what I was looking at in the beginning. It's like, how do we navigate those waters? How do we prove concept? How would we do it we could minimize all the expenses? Because it's quite expensive. If you're using a top 50 law firm, you're talking $2,000-$3,000 an hour for any kind of consultation, especially when every decision you make has a compliance component to it. So I'm coming up with a new word here. It's like you always hear innovation stack, tech stack. Well, we're going to introduce the compliance stack. And so I'll be talking about that.
Nice.
So that's, to me, it's just an expense in the P&L, but it's going to be an important part of the financial world is, hey, how's your compliance stack? Because we always hear in all these startups, hey, my innovation stack, I'm using this and this code and this. But at the end of the day, when you're in the financial world, it's very important to have that all buttoned up.
Yeah, I think so too. Just having that compliance. I've been seeing more and more people and companies talk about it, and then even some of the books I've read, that one with that Robert Kiyosaki's accountant, and he's like saying, as an accountant, their job is to look at the laws that are in place and try to adapt with them and make them a positive. And I think that's kind of what being compliance is you can adapt to the waters now, but then from that foundation, you can really continue to grow instead of taking one step forward and two steps back constantly.
Exactly.
The fact that, DiversyFund is doing all of that work, you guys are doing all that work and allowing the average investor to invest in real estate without having to worry about all the compliance around, all the regulation. I think that's a huge benefit and a huge win just for, people in general, because it does open that window to be able to invest into these commercial real estate properties.
I was talking to someone. I was made advisor of another group, some commercial app that someone's coming out with, and we were talking about. It's like, have you seen the closing statement in these transactions? I was like, do you know how much these attorneys charge? It's like, it's like $300,000-$500,000. He was going, oh, that's an idea for another business. I started thinking, it's like how you could streamline the closing costs and the attorney's fees, because they're outrageous in the transaction. I mean, $500,000 in closing fees because all the attorneys got to get involved, because each city is different, each state is different. You got to look at the federal level. Hey, if I'm doing this, is there securities? Is there real estate law? All the layers of different. Right? It's just, geez, what is going on? And what, red state, blue state, which state? I don't even know. Oh, maybe it's not the state. Maybe it's the county. Okay, maybe then it's the city. It's just there's too much.
Kind of sounds like a plug to go become a lawyer if you're in school still. Who knows? But so let's go back to DiversyFund. What does the future of DiversyFund really look like? We've talked a lot about the fact that you allow the everyday investor to invest into commercial real estate properties. You have that educational component, which I think is probably the biggest piece of it all. The fact that you are allowing people to learn about this asset class that they probably would not have. One, because they couldn't, they weren't accredited. But you're allowing that transfer of knowledge, which is so powerful. But what does the future of DiversyFund look like?
It's really navigating the waters of compliance and technology, because I really see, like blockchain, for instance, the underlying technology there is phenomenal because the transactional costs are all diminished, right? And so what we see is, hey, how can we lower the limit from $500 to $100? Well, if a $500 transaction is costing us $10, right? A $100 transaction costs us $10, or $1 million transaction costs us $10. Now you could see, is there some kind of discrimination there? Because it's the same fee, and who collects those fees? The payment processing centers, the banks, the transfer agents, the broker dealers, all these people have their hands in a pie. So we're trying to, how do we do this? How do we use technology and the compliance to drill down those costs? Because now you do this, now you have people starting out a little bit, I call it like top of the funnel, a little bit maybe younger, or a little bit from a different perspective earlier in life to do this stuff, and they could maybe have that come out of their paycheck. So what's $100? But if you get in the habit of saving $100 each paycheck, just twice a month, 200 over a year, that's almost $2,500. You could see how you could put yourself on that path to growing wealth. And to do that, we need to kind of like, yeah, we have the technology built out, and we're continuing to improve that technology. But how do we connect that with the compliance? Because that's the thing is, a lot of the SEC is like, okay, they don't like NFTs. Well, what's their opinion on crypto? Well, they're not saying much in crypto, but their hands are a little bit everywhere with these things. Well, we're outside of that we used some of the crowdfunding laws, but those are the blockchain technology, the NFTs, and crypto. How does that play into this? And that will be incorporated in this in some form or manner over the next coming years, which again will allow more people to transact a lot more seamlessly. Because all I get when I receive money, I get paid. I have to pay a fee, and it's like, why do I have to pay a fee when I'm getting paid? That makes no sense to me. So okay, I get paid money, and then I have to pay someone to get my money. That makes no sense. Or I go to an ATM machine that's outside my bank. If I use an ATM, I don't even go to ATM machines anymore. But I'm paying $3.50 to get $20 out.
Yeah,
right.
And that's outrageous. So these are the things that are still there. And we know it's politically motivated. We know those banks could afford the attorneys again and the lobbyists that most people can't, to keep those archaic, I call it archaic law. I don't want to say laws, but archaic ways of doing business in place.
We actually last week just talked about this, and fun fact that in the traditional system now for a payment method, I mean, it's a little bit different, I suppose, than what we're talking here. But in the traditional payment method, there's 5 parties involved, when in reality, there really should just be the buyer and the seller. And that is, I'm glad you brought up the blockchain, because I think that's going to solve a lot of issues. Specifically with you guys, it's going to help you bring cheaper costs to the end consumer. But this, just in general, the blockchain is going to allow just for cheaper transactions.
Yeah, and so it's like then I have to do the AML check, which is important, anti-money laundering check. But you got to put that tech in, and like you want to use a third-party company, maybe they're charging you whatever, how many dollars they charge per transaction on that. And how do you get that into like 0.01 cents? It should be something but how do you make that from whatever they charge, $10, $8, $5? How do you kind of drop that down where it's just, because it's important, you need to do that stuff. However, it kills the cost of the transaction. It just doesn't make economic sense to do it.
So I saw on your website's roadmap that you guys had some new tech updates potentially coming in the next, or I think last year or beginning of this year. Has any of those new tech updates happened yet? Or is that the blockchain
our apps,
you're talking about?
Yeah, on our apps, they've been updated. We're both on iOS and Android, so they've been updated, starting to do those push notifications, better graphics, better functionality across that. That's been released. They're releasing stuff like every couple of weeks now, so I just don't keep up with all this stuff. There's a lot of little things and techie things that you need to have, which you don't see, kind of like we might not notice, but it really does make effect on the whole customer journey. And I would say that's the big one. And behind the scenes, improving its technologies and the speeds and the costs. We have some projects to moving from different banker partners and stuff like that at the end of the day to cheaper, more tech-oriented, and what we've talked about, things that are lower cost to do it. And that's kind of the thing, is that we still have to use these payment processing, these banks, and they all charge fees. So all these new ones are popping up, which are cheaper than before, but they still charge fees. And that's what I'm trying to get at, is how do we create something where we can almost eliminate all those fees at the end of the day. And that's an uphill battle. We're trying to minimize as much as we can. But if we could, then we could kind of lower those minimums even more.
And which would ultimately allow for the end consumer to have better returns, right? Because if you're talking $10 on a $100 transaction, they need to make back 10% just to get back those fees. So, I think all of that is going to be a huge benefit for the end consumer. But Craig, let's move into our final couple of questions here. So this question we like to ask all of our guests that come on our show, and that's what is your financial advice? So do you have a guilty pleasure, something that you like to buy from time to time, even though it makes you feel guilty when you do so? So Craig, do you have a certain financial vice or a financial guilty pleasure to say?
I had one. Today, I am learning and doing. I'm starting to buy businesses. That's a little secret. So on the side is I'm starting to buy some businesses. Today I'm putting together an LOI on another business. So that's my pleasures. I want to own multiple businesses. Some smaller ones, not huge ones. It's not like I'm like I'm the CEO of Twitter and Square here. It's just maybe smaller stuff. But I thought it's fascinating because I read Elon Musk is trying to buy Twitter, and I'm like, oh God, I'm thinking, how do I kind of buy a couple other companies at the same time? So that is what I'm diving into today. Yeah.
Man, how do you find the time? Having your own business, going with these other businesses.
We had that conversation this weekend. I don't know if my wife was happy about that one, about finding the time. You make the time, and actually that's a great question because I've really kind of dove into like time blocking and started working on, okay, what are the things I need to focus on each day, and then what are the things that are driving those things. So I really here's the 3 things I need to work on the next 90 days, and I really kind of try to time block and make sure my time is spent on working on those things that drive those 3 things, and everything else I try to delegate. And like I was telling, I'm an advisor to some people, and I'm a mentor to some people, and I'm like, you better start learning to delegate. I was like, what are you getting on? Because you're not going to hit any of your goals if you try to do everything yourself. And it's not an easy skill to do. And I say to do because it's not like it's innate. It's not like you're born to do it. Like they say, oh yeah, this one person is. Maybe that one person out of like a million's born to do it. It's developed, and developed is through practice. And it's like, okay, you need to read, you need to talk to people, you need to actually do it, and just then you find your own rhythm. What works for you? So what works for me might not work for you, but still you could try out what I do because you want to try how other people do things, because it minimizes your mistakes, and that's kind of the game. It's like, can you learn enough not to make too many mistakes to keep you out of business, but to stay in business long enough? That's the challenge.
And I think that's so true across so many facets of life, right? Whether it's time management or even if it's, money management and investing and getting into that rhythm of investing so much money per month to really set yourself up for future success, for wealth building, just being cognizant and building those skill sets, like you were saying, whether it's delegation or whatnot. But Craig, so one last question for you before we wrap up is every week Drew and I share with our listeners what's going on in our neighborhood, just as a way for them to get to know us a little bit better, not just the finance guys that, talk about money, but, maybe a little bit more about who we are as people or whatnot. So what's going on over in your neighborhood, and where can people go out and find more about you or about DiversyFund?
So I would say, besides everything we talked about before, is what I like to do is I'm big into the biohacking stuff. So I'm constantly doing new stuff. Like a couple of months ago, my wife saw this huge package get delivered. I got a home sauna built, and then I'm always adding more components. And now I think this way, what am I working on this week? Now I'm like, you know what? I'm sick and tired of all these apps about health and nutrition, and they're all like, there's 10 of them. I was like, can I just get one that just takes all the information and bring it together? So she thinks I'm going to buy another business and start another business there with that. So that's what I kind of do in my free time. So I always try to optimize myself into the biohacking stuff. And, as I drink a tea with mushrooms in it that are supposed to help you out and not have the afternoon coffee. So those are the things I'm always working out in my free time.
There's 2 things I have to say with that. One is I have I'm a bit Finnish. I have some Finnish blood in me, and we actually call it a sauna, not a sauna. It's always a joke. So it's funny. It's like everybody calls it a sauna, but then up here, stubborn Finnish people are like, it's always a sauna. And then the second thing is I saw you do an ice bath, and you're quite the professional at that.
I did one last night. Yeah, I do it about 3 days a week. Yeah. That's pretty easy to do. There's a lot of YouTube videos. You could buy a freezer. You can always find something on sale, $300-$400, and the parts are like less than $50, and you can just put it together. It's on YouTube and how to do it. And I get it around like 34 degrees. Starts freezing up if it gets any colder, and I just kind of jump into it 3 to 5 minutes each time. Try to do it 3-4 days a week. Yeah, it's been it's very, very great for the mental side and the physical side for the recovery. So I enjoy. Can't say I enjoy doing it, but I enjoy the benefits. Every time I jump in there, I'm like, this is gonna suck, and it sucks.
Yeah.
But I do it.
Well, I give mad respect to you or people that do like the cold shower mornings every single day, because I just cannot get myself up to that, because I like don't like being cold. I'd rather be warm. And so props to you for taking those ice baths.
You start the cold shower first. You gotta accomplish that one first. Baby steps.
There you go. All right, Craig. Well, thank you so much for joining us here on the podcast today. Loved having the conversation about crowdfunding and, really just allowing your everyday average Joe investor access to these types of assets like commercial real estate. So thank you for all the information and the expertise you brought onto the show. It was a great conversation. I had a lot of fun.
Great, guys. Appreciate it.
Man, Drew, like we said in the intro, like what a great conversation that we had with Craig. He just had, so much knowledge around how you can crowdfund and help, the average person invest. And like you said, for as little as $500, you can get exposure to commercial real estate through DiversyFund. But, coming out of that conversation with him, what would you say is your main takeaway?
Kind of pretty much what you're just saying there, is being able to invest in real estate for just $500. I think that's such an important thing to think about, because when you hear people say I'm going to invest in real estate, one of the most common answers you hear back is I don't have enough money for that. And through these real estate investment trusts, or these REITs, it allows multiple people, or a mass or cohort of people, to put in smaller chunks of money to actually buy these pieces of property, and then slowly, as the years go on, be able to make some passive income from investing in these type of assets. So something as low as $500 you can put in and invest, and then you can help budget your own self, and then kind of keep adding to that as you go, and just help increase your money that you get back towards the end of it. So I think that's probably one of the big key takeaways that I can think of.
If you just think about, generally speaking, around your finance or on investing, this is just a great option to help you build long-term wealth. I know Craig said it a couple times, the fact that, this is for long-term investing. This isn't something that you want to speculate around. So if you're currently investing into stocks or maybe index funds, and you're like, hey, you know what, I've always wanted exposure to real estate, specifically commercial real estate, then, maybe this is a really good option for my portfolio to help diversify. So I'm not just, 100% in stocks. I can, maybe split up into some real estate. And, even beyond that, Drew, maybe someone's thinking like, you know what, I've always wanted to get into real estate. They can use this as a way to invest into real estate until they have enough funds to go out and buy their own property. So there's just a lot of options here with DiversyFund, or just, investing in REITs in general, because it doesn't just have to be investing through your 401k into stocks, mutual funds, index funds. You really have the option to go out and get exposure to commercial real estate, specifically here with DiversyFund. And I think, coming out of that conversation with Craig, I would completely agree with you. I think the fact that you can do it for as little as $500 is absolutely just such a great option to consider when thinking about your financial goals and how to achieve them.
As well as going with Craig's type of company too, that DiversyFund, being a REIT, it's not a publicly traded real estate investment trust, so you're not just buying a ticker symbol and seeing it grow or decrease, whatever it may be. It's kind of nice with the DiversyFund is Craig puts such an effort into education, and I think that's something very unique that you can get from very regulated company, but you actually have some personal connection. They want to talk to you. They want to educate you on this type of process. And this is something that you might not have if you just go and buy a stock, or you try real estate investing by yourself without any help. So the education side of it, I think, is huge. You're seeing that movement towards financial literacy and education more and more as these years go on. And I think it's just very important that it's, part of their foundation of the company.
So a couple of weeks ago, we did the spring cleaning episode around how to spring clean your finances. But man, it feels like spring is just never coming. I mean, we were just talking before we started recording the fact that you've still got like 20 inches of ice on the lakes. Yep. It's still snowing down here outside of the metro in Minnesota. But man, I got to believe that spring's got to be on the horizon. We got to just be rid of this snow.
Yeah, I don't know when spring's coming or not. The only positive with the snow that keeps coming is I said I was going to wait for a nice day and actually spring to come before I was going to spring clean that garage, which I've procrastinated and still not done yet. So the snow coming kind of gives me an extra couple days if you say, hey, it's snowing, it's too messy out there, I can't go clean the garage.
That's not a bad excuse. So unfortunately, with that, it kind of makes what's going on in the neighborhood this week kind of boring because, we talked about we don't really have a whole lot going on. But are you watching any like good shows or anything on, Netflix, Hulu, or whatever?
Well, we are just finishing up the second season of Below Deck Sailing Yachts. We've kind of binge watched all of the Below Decks, and then we just put off the sailing side of it because there's always like the big motor yachts. But then we started the sailing ones, getting into it. We started binge watching that, and as of right now too, there's also Below Deck Australia going on, or Below Deck Down Under, I think it's called. So we're watching that one, but that one's coming out on a weekly basis, only on Thursdays. So unfortunately, we have to wait every week for that one, but we're binging the sailing in between, and after we finish one more season of Sailing Yacht, that means we've watched every single episode of Below Deck, and now we're going to have to wait weekly for the Down Under one, which, being that much patient, it's just like after every episode, I'm so used to just binging through it, I'll be like, I can't believe I have to wait till next week.
Isn't it funny how a decade ago, probably even less than, you actually had to wait weekly to watch your shows, and now like it's such a pain when you actually have to watch it weekly, and like just privileged that we can just binge watch Netflix or Hulu or HBO or whatever streaming service you're using. I think that's pretty funny that now we're in the world where if you can't watch it instantly, it's like, what the hell's going on?
Yeah, I know. Even with the commercials, there'd be like, I guess now they're like on Hulu Live, they kind of started out with like 15, 20-second ones. Now they're getting up to like a minute, 2 minutes. So they're slowly creeping into what it was before, which I hate. But even that, it's like they're shorter commercials, and I still am like, and there's probably only like 3 or 4 during the whole episode, but still I'm like, commercials, really? And then you go to HBO or Netflix, don't have it. So even commercials, just it's got to that point in the world where I don't even want to see commercials anymore. And I talk to my nephews and nieces, and they like don't even know exactly what a commercial is. So when they see it, they like, but the youngest nephew like starts crying. He's like, can we fast forward through these commercials? And it's like, it's live TV, we can't fast forward through this. And he doesn't understand that, which is kind of funny.
Well, Drew, I got to tell you, and I think I can say this because I don't know if Hannah will necessarily listen to this episode, but she has been watching a show called The Ultimatum. And if you haven't heard of what The Ultimatum is it's kind of like The Bachelor, but trashier. So what it actually is it's a couple that's been in a long-term relationship. One person gives the other person an ultimatum, so marry me or break up. And then they go on this show, and there's 4 couples, so like 8 people in total, that all have ultimatums given, from one person to the other. And the point of the show is then they go on the show and date other people. Then they get to choose a like new pretend husband or wife that they then spend 3 weeks with, who is not the person they came on the show with. So after those 3 weeks, they go back to their original partner to spend 3 weeks as a trial marriage. And then at the end of the show, they either decide if they want to get married or split ways and, do their own thing. But man, Drew, I got to tell you, this is like the trashiest of trash TV I've ever seen in my life. And, it's addicting. Don't get me wrong. I've seen like a half an episode. I caught one when Hannah was watching it, but man, like where have we come? Where have we come?
Voluntarily go on that with their significant other. Like if I had a girlfriend that went on that and decided, here's the ultimatum, and for a little while I'm just gonna be dating somebody else, and then at the end of that, like we potentially are getting married, I'd be like, no. I can't even believe that.
So, I don't know how that makes me feel about society right now at large, but hey, you know what? To each their own. People get entertained about it, and there's people that go on those shows for a variety of reasons.
It's honestly,
it's crazy.
It's honestly probably like a car crash where it's not great, but you can't keep your eyes off it. And I hate to say it, I probably will go watch it now.
I guarantee Jordan's heard about it. If not, has seen an episode. Well, actually, if she has seen an episode, you probably would have known because she'd probably binge it. if she's anything like Hannah.
I'll just be sitting on the couch, eating some chips, and just constantly talking and judging.
There you go.
Well, that wraps up another episode of the Neighborhood Money Podcast. Craig had some very, very good points. So interesting to hear what he's doing, how he started, how he got through this, the future of DiversyFund, and just the opportunities that are still there in the future. And, even his financial vices of wanting to even branch out and do other types of businesses. It's so inspiring to hear him talk. And I just hope that you guys got some type of content out of this. If you didn't know what crowdfunding or REITs were before this episode, I hope that you're able to get some type of content out of this episode. And now you maybe know a little bit more about crowdfunding and REITs. So if you enjoyed this episode and you're listening this long into the episode, I want to thank you again for listening. And we'll see you next week in the neighborhood.